Good morning to you, and welcome to another promising session on the XAUUSD. So, the XAUUSD is going to be one of the instruments that we shall be monitoring for this week. And in fact, it's also going to be noted that this is a follow up detail to my previous analysis. And talking about follow ups on the XAUUSD, we were able to catch over 5,000 pips as price action moves significantly well in our direction. And talking about follow ups here, I would like to share some key moments that we had during the course of last week. Though the week started up with a consolidation phase as there was a little indecision in that market, and this was as a result of the public holiday that was observed in the US, and that was the president's holiday. And this brought some low liquidity in the market, and as a result of this, we had that situation running. Though we had some buy opportunity above the 1,845 level, but we were taken out of that position at one point. Then we anticipated the breakdown of that channel, and this was exactly what happened on the 21st of February. We saw the breakdown of structure, and price action continued to move in our direction. Though there was some couple of choppy situations that happened where some buying opportunity came in that we took advantage of, but we were taken out early enough to give us some small profit and in worst case scenario break even. But the key moment didn't come until the 22nd, which was prior to the FOMC. And on the 22nd, we saw the situation here where we had that bullish momentum happened. We joined above the 1,038 and we were taken out of all the positions, as you can see here. And I said that we shall be looking forward to the breakdown of the 1,833 level that will be welcoming selling opportunity. And during the FOMC, we saw price break down that 138,333 level. And it was at this point that we had the first breakdown of that support level, which has been supporting bullish momentum throughout the week. And this was a signal that we want to be selling the XAUUSD. So we sold the XAUUSD and we rode the move all the way down as we continue to see selling pressure below the 1,833 level. And prior to the GDP, we identified a trend line, that is the bearish trend line, which we said shall be guiding our trading activity going forward. And as you can see, price action continue to trade within the ambit of the trend line, finding lower lows and lower highs. And as a result, we rode the move all the way down, closing the week with over 5,000 pips in profit on three positions. If you do want to have a personal examination of this commentary, I will be dropping the link in the comment section of this video for reference purposes. And if you are watching this from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen. Now, with that being said, here I will be diving right into the current market structure, and we shall be taking a technical dissection starting from the daily time frame. Now, if you look at the current chart here right now, this is the daily time frame, and the first thing you would observe is the fact that price action had been bullish since the later quarter of the last quarter of last year. We saw our price had continued to find higher lows here, giving us a bullish momentum. And to further buttress the strength of the buyers in this market, we saw the situation here that happened at the beginning of the year as we saw a final breakout of the 1,820 level, which was initially a strong selling niche in the past, as you can see throughout the later part of last year's trading session. I think the second half of last year's trading session, we saw how the 1,820, 1,800 level had been a strong supply zone. And at the beginning of the year, we saw the breakout of the 1,820 level, taking out all the sell positions here to give us a beautiful signal of a possible bullish momentum. And in that regard, we were lucky enough to be part of this bullish momentum as we continue to add more position as price action breaks out structures like the 1860, 1900 level. Now, during the at the beginning of this month, we saw selling pressure resume at the 1950, crashing back into that trend line. And this was broken during the course of last week trading session, doing a further breakdown of the 1820 level. And talking about the 1820 level, you'll remember how significant this structure has been. And in fact, this is where price action started the new year above the 1820. And what we have right now is price action breaking down the 1820 level to give us a possible bearish signal at this particular point in time. And if you remember vividly, the 1820 level below the 1820 level had been a strong selling niche in the past. Here, as you can see what has happened here, it has been a strong selling niche. And for the fact that price action has broken down the 1820 level during the course of last week trading session, I am going to be tending towards a bearish momentum. And what this simply means is that if price action continue to trade below this level, selling pressure below the structure on my lower time frame, I will definitely want to be thinking of selling opportunity on this instrument. Now, in order to take advantage of a trading opportunity on this one next week, how do we intend to use this current structure to identify trading opportunity? Well, I was able to identify a simple setup that we can use on a much more lower time frame. But before I go into the lower time frame, it's very important that we look out for macroeconomic events that will be bringing some liquidity into this market. Obviously, without liquidity in the market, whatever structures we identified here might not bring us any price movement. So, in that regard, we looked at the economic calendar and we shall be looking at events that will be affecting the US dollar. And the first event is coming in on Monday rather. And the first one is the durable good order. And from what we have here, it appears this is not a good expectation as we have a consensus of minus 4% as against the previous data of 5.6. So we shall be looking forward to see the actual figure here if it will be as expected, below expectation or beyond expectation. Then on that same day we have the non-defense capital goods order which is coming in at 0% as projected by consensus here, and this is against the minus 0.1% that happened previous month. This is a little bit of positivity here as we expect that this might likely bring some positive news for the dollar. Then on Wednesday, March 1st, that's the first day of the new month, we have the ISM manufacturing PMI. And a consensus projection here says 48 as against the 47.4, which is quite positive. So let's see what the actual figure is going to be like on that day. Then on Friday, that is the last trading day of the week, we have the ISM Services PMI, which is consensus are projecting a 52.4, a little bit lower than the previous data of 55.2. So these are macroeconomic events that everyone will definitely want to be looking forward to for this week. And obviously, we shall be seeing the anticipation of this event reflect on the charts as price action. So in that regard, we want to be taking a technical look at the current market structure. And like I said, we shall be scaling down to the 4 hours time frame where I was able to identify a simple setup that we can use to guide trading activity for this week. So I will be zooming into what has been happening here since the beginning of this month. And the first thing you would observe is that price action has been bearish. And to further emphasize the strength of the sellers at this particular point in time, I was able to connect the series of lower highs here, which has given us this bearish zone that you can see on your screen right now. And obviously, you can see that price action has continued to respect that bearish trend line, breaking down structures like the 1900, the 1860 level, and finally, we have the breakdown of the 1820 area to signal the strength of the sellers at this particular point in time. And remember, the 1820 level has been a strong demand zone in the past year. And with the breakdown of that structure, it's a beautiful signal that we might likely have a situation where price action has taken out all the buy position here, and we need some liquidity to further emphasize that sellers are still very strong in this market. And what we are going to be looking forward to see the reflection of liquidity in this market, if that is going to be the case, is price coming back to do a retest of the $1,820 level. Look out for selling pressure below the structure on our lower time frame to join a decline to the downside. And there is also a possibility here that price action could even break above the 1820 level, climb a little bit to the upside, respecting that bearish zone that was identified earlier to incite another wave of bearish momentum at this particular point in time. So this is what I will be looking forward to for selling opportunities here. Then another thing that could happen here, that is, if price does not climb back into the 1820 level, we might likely see a trend continuation pattern just around the 1810 level here on our lower time frame. We could see something like a bearish rectangular pattern following this impulsive move, breakdown retest on our lower time frame to incite a sell-off in this market. So we shall be looking forward to this expectation too as well. Now, in as much as we continue to look out for selling opportunities in this market, we cannot ignore the possibilities that buyers could likely come in. And considering the fact that we have a strong demand zone right above the 1820 level, the breakdown of the 1820 here could turn out to be a false breakdown. So, if this is going to be a false breakdown, what do we want to see in this market that would convince us that it is a false breakdown? Well, for me at this point, I will be suggesting that I see price action take breach that bearish trend line, take out all the sell position along that trend line to give me a bullish signal. So if I sight a breakout of that trend line, then definitely buying pressure resuming above the structure here will definitely be giving us an opportunity to buy the XAUUSD. But as long as price remain below that bearish zone, I will continue to think of selling opportunity in this current market. So at this point, I would like to pause the video here and be rest assured that I will be jumping right in the comment section on Monday morning after monitoring our participants in this market. Will be reacting to this current structure to give you an insight into what my expectation is going to be like for the week. I hope this video has been of immense help in making your personal decision on the XAUUSD, and if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you same time on Monday as we get prepared for the new week. Do have a wonderful evening. Bye bye.